Good afternoon, traders. This is Christian from Market Trade Group, and it is Monday, May 10th. So, rough way to start the week. S&P down about 1% for the week, for the day. Sorry, for the day. The Qs are down 2.5% for the day. Nasty kind of just underperformance all day for the Qs today. IWM joined that underperformance some point today, I think a few hours after the open. They finished, small caps finished down 2.5% for the day. The bonds, that was something that we talked about towards the end of the week that looked, that looked like to be a false signal. On Friday, bonds tried to go higher and failed and ended up going lower. So they had that downside continuation. Yields went higher for the day. And then the VIX, big move up in the VIX today. Up to, I think it closed at 1966. So under 20, but up about 17, almost 18% for the day. VXN, which is the VIX for the Qs, actually wasn't up as much, but that finished about 2026. So that's the performance for the day. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through here is for education purposes only. If the screen happens to be blurry, YouTube takes a long time to render high definition videos. So just give it some time. You can close the video. You could wait, give it half hour or an hour, and it should be clear. It just takes some time for YouTube to do that. You could also follow along with the screen print that I put on Twitter. So let's talk about, whenever I start analyzing the market, I try to really formulate, I try to be as objective as possible. I really tend to kind of look at first, what the major indices are doing here in the U.S. Of course, I do look at international markets too, but because the majority of what I'm trading is in the U.S., I start with those indices first, right? And then I will go and I will gravitate over towards sectors, right? Because as a retail trader, one of the advantages that I talk about in these videos is you could trade anything that you want to, right? And last week we saw some really nice outperformance in in a lot of the material and commodities areas. So that's really where I spent a lot of my time trading last week on things that were doing quite well and outperforming, and overall had a really nice week doing that. So now kind of coming into this week, I do a lot of work on the weekend where I put together a new watch list, and I was having a little bit of a challenging time doing that, putting together the watch list, because a lot of the names that I had were kind of names that I had either traded last week or basically not seeing very many new signals, just kind of looking for continuation from what we saw last week. And normally it's a little bit different when we enter the week. I was looking for things more in some of the beaten up areas, and I'm like, well, sometimes the way that we end a week, sometimes we need to kind of see things develop as we start to enter the week. So, that was my plan coming into today, basically saying, hey, well, let's see if things kind of materialize as we get through Monday, even maybe Tuesday, and then we might see some good looking setups. That's kind of shifted a little bit because, the way that the market acted kind of in the afternoon on, I think there's a lot of profit taking now, just looking at what the averages did. But some of those areas that did really well, those, industrials, materials, energy, saw a little bit of profit taking. And the question is, and normally what you see is, when a couple sectors, and this is basically, how a bull market really functions, is when a couple sectors get really ahead of themselves and overbought, traders tend to take profits in those groups and put them in other places. We're not really seeing that right now, so it's a little bit concerning for the day, and it's just one day, it's not a trend. But the things that really outperformed the best today were what I classify, and I use an ETF for this called SPLV, but your low volatility equities, your utilities, your consumer staples, your telecom names, those are the ones that finished in the green today, right? And those higher beta areas of the market really got hit. today pretty hard. This is SPLV, by the way, so this is low volatility equities. That's something that I've been with my watch list trade that I usually put into effect. I've been actually just holding SPLV for now. Because number one, it's trending, but this market, I'm a little bit worried about just how the price action is going. So that said, let's talk first about the individual indices, and then we'll drill into some sectors, and we'll make some conclusions as we go along. Remember, I don't want to come at you with any major opinions here. Let's just take note of what's kind of happening, and then we'll formulate a little bit of a conclusion as we get to the end of this video for Monday. Right, so the S&P did finish down 1%. One of the things that I noticed towards the end of last week is we got out of value for the month. So let me throw on some levels here and the volume profile, right? Because our indicator uses the volume profile. I like to just turn these on because for some new viewers who are not familiar with the MarketWebs indicator and what it does, but it provides some really good resistance and support levels based on volume at price, right? This is the shaded area from the month of April. We basically use that market profile and draw it ahead into the next period, right? And we give it some statistically significant levels, which is the top of value and the bottom of value, again, which is based on this volume profile. Okay, so we started the month inside value. The first day of the month it got rejected, right, at the top of value. We spent some time in the middle of value, chopping around last week, and then we resolved higher, right? Now, today, we try to actually go higher again, and we would call that a failure for the day because we closed back inside value. So we're still, we lost the 5-period moving average, we lost the top of value, but we're still above the 20-day moving average. So all is not lost, like they have in the movie Animal House with who's that, Kevin Bacon, who's saying, relax, all is not lost. But really here, the 20-day moving average, I like to throw in a few jokes here and there, sorry. The 20-day moving average is still being held, and we kind of just have to watch to see if that changes. If we do break the 20-day moving average and start moving to the downside here, defense is in order. But in all honesty, I don't like the look of this. You try to go higher and fail, and you go lower. That's not a great look. But again, one day is not a trend, so let's not get over dramatic by one day of price action. The Qs, on the other hand, have a bit more stuff going on here, right? So on Friday, right, that jobs report that everybody got all excited about, that it might cause some of the growth areas to outperform, the Qs ran right into resistance and got rejected. That's at 334.80. So again, MarketWebs giving you an excellent look at what transpired there on Friday, and we talked about that in Friday's video as well as in the room, that hey, rallying right up to the bottom of value and not getting inside is was not the best sign on Friday. So now we have a nasty green looking bar, and we're down to the we're basically closed right at the 50-day moving average. So this is going to reveal itself in the next couple of days. Are buyers going to come in and support this, or are we going to see more liquidation, right? Obviously on Friday what we saw was selling into that strength, and then today just felt like more liquidation. All right, so that's kind of what we're going to have to watch out for in the Qs, right? Let's talk about IWM for a minute, right? And there's a lot of things to kind of talk about here in IWM, which is the small caps have been going sideways, but you look under the hood and you got some major things going on here. So number one, 219.82, basically right where we closed. It looks like we closed a little bit lower than that, but that's going to be the level to watch for tomorrow, right? We break value and some nasty things are going to happen. Now, what's been going on here is, a massive rotation. So if you break this apart and you look at growth and value, small caps first, and then we'll look at the large caps too. But, until today, the value looked really good. Now, you do have a bearish engulfing candle for the day because it looks like this whole thing took out this. So that's typically a reversal candle. Again, One day is not a trend, but this does look like a reversal pattern. Price is still above value, 163.41. So confirmation for the downside would be a break of sorry if I said that wrong, 163.41. So 163.41. Okay, so all is not lost for the value areas of the market, even though they saw a big push, to the downside. Now, IWO, right? So this is kind of why that, you go back to the IWM chart and why it's in the middle of, or right now it's kind of clinging to the bottom of value. But you could see that growth is really moving to the downside, close to breaking down here, and you got some support. But we'll have to see if this is held tomorrow. If not, perhaps we could see a move past this S1 284.68 and a move back to the 200-day moving average for growth. Okay. All right. So again, you look at IWM, it's holding up better than that because the other side of it is IWN, which is value, which is doing better. Now, let's talk about this just for a minute. Why is all this happening right now, right? Well, if you look at where we are now, right, this is the 5-year chart, small cap value in the numerator versus growth in the denominator, right? So this has been trending, growth has been outperforming, and value, again, which is in the numerator, has been underperforming, but it really got to a heightened level when the pandemic started, right? Because things like, Zoom, Peloton, right? Things that you could do at home, growth stocks, software names, right? That's where everybody wanted to be, and they excelled quite beautifully last year, right? And most of last year. So now that we're kind of through basically we're getting through the pandemic and the country, everything is reopening. I don't know if you guys drove around yesterday for Mother's Day, but the traffic was insane. So that's just one kind of little indicator, but people are not staying inside like they were last year. And that's just one thing, but I can go on and on about that because I'm in New York City and I see how many people are at restaurants now. Things are packed. So, where this price action is basically back to where we were when the pandemic started. So we've retraced this whole move. Now, does this continue, where value can actually outperform now? That's something that we'll have to watch. We don't know how far this ratio is going to go, but for now, we know that we've basically retraced just about everything from where the pandemic started. Right, and people hit out in also things like Amazon and Facebook and things like that. So things have changed, right? Things have changed materially, and that's one of the first things to kind of realize too. Is that all those trades are becoming unwound, and I think that that if you've been kind of trading over the last couple months, you've seen it, right? Let's take Zoom, for example. That's a name that we've talked about months ago, but I haven't really talked too much about it. But, I was just talking, like I said, I was out for Mother's Day yesterday talking to my niece and nephew. The last thing these kids want to do is get on Zoom calls. Just to listen to what their attitude is towards Zoom. They do not want to be on Zoom calls, right? They just talk about it's kind of changed their learning. So again, it's nothing against. I have nothing against this company, but it just kind of shows you what we've experienced over the last year. Everybody was using Zoom, but kids just are having a really tough time learning in school because it really probably wasn't meant to be through video. It was supposed to be, when you went back to school, or think about when you were in school, when you were young, and when you were bored in school, you probably doodled on your page and, all kinds of things. It's different now. Like being on a Zoom call, kids just do other things, than pay attention to class. I hate to break it to you, but, so that is kind of why you're seeing this name go down. And it could go down further, right? Because just humans have spent way too much time on Zoom. So again, this is a little bit of my opinion, but I'm throwing this in here just to add a level of of depth, right? And I said I wasn't going to be opinionated, but I am observing things. When you talk to people about how they're doing on Zoom calls, I don't know very many people at this point who like to be on, televideo calls for hours on hours. So that's kind of what we got going on right now, and this is just one company, but I think it's happening in a lot of places in the software space. Okay, so that is why, in my opinion, you're seeing an unwind of some of these things. Now, so we talked about, so that's what's going on in terms of value versus growth. And it's just basically also value indicates to me a bit of risk off when you have that much. And when you look under the hood and you see today utilities, consumer staples, I think that kind of makes sense. Now, the problem with this is, and what we kind of experienced last week, is a bit of two different markets, right? So you've had the value outperform growth, but growth is a bigger portion of the indices. So what begins to happen is, if buyers won't come back in, so as they're taking some profits in some of the commodity places and some of the materials, the industrials, the financials, if that money doesn't go back into growth, if it goes into cash, then this market begins to kind of tip over a little bit. So that kind of brings us to the next thing is, as some of these prices go down, we're going to need to see that money be rotated back into growth. If we don't see that, right, and there's more money more profits being taken in the financials and the materials and so forth, then you may see some more downside, in my opinion. Right, so that's kind of the conclusion. We're about 17 minutes in this video. I will give you another level to watch in the S&P, which I was hoping that we were going to hold top of value, but right around 41.95, which is the 1 hour value area, we did come all the way inside value now. So now we're going to have to kind of deal with possibly, if we do get a bounce, retaking that at 41.95, or if not, you could see that this is now signaled a bearish 80% rule, meaning there's now an 80% chance that we go all the way down to the bottom. Not a 100% chance, but an 80% chance that we will go all the way down to 41.4725, which again, not that big of a deal, because that's where we were last Wednesday, or last Tuesday to Thursday, I would say. Half the day on Thursday. So, all in all, that's not such a big deal for the S&P. Also, that level, you'll notice that you've got a VPOC down here at 41.70. Right? So what was this level down here? This is 41.45. So first things first, you're going to have a VPOC here on the 5-minute, 41.70. That's right at this point of control. If that doesn't give a bit of a bounce to the S&P, then perhaps we could see a move down to 41.47. Okay, so that's kind of the thoughts. When we do see some profit being taken in value, if it doesn't go back into growth, that's when the market kind of gets, can lose its overall footing. Now, keep in mind where the Dow was this morning. Right? The Dow made a new high this morning. So again, this is all in all, like, to me, not that big of a deal yet, and we'll just kind of have to see where this goes, because this Dow 30 stocks have been super strong. Now they did try to go higher again. They were up about 70-80 basis points and came in. So I don't know if that's a reversal bar yet, because one day is not a trend, but I don't like the look of that bar. A couple other sectors too that I'm watching. Right, so we didn't really get into sectors other than talking about the defensives outperforming. But if you look at some of these areas down here, clearly just anything higher beta, the clean energy, the solar, that is really coming undone. This was one of the best performing groups last year. So again, it's the question of once the momentum breaks and the trend breaks, it really starts to unwind quickly. And keep in mind where this was, and and that's the other thing to be cognizant of is that look at this chart last year. This went from $28 to 120. So you have to have that in perspective a little bit, is that how far these things went up and how quickly they climbed last year. So now you have you could use that term, I guess, reversion to the mean. You could see that this 85.50 has been broken, right, which was the top of value, which was holding for a while. So this is obviously coming undone pretty quickly. If you want to look at PBW too, which was clean energy. Clean energy does have some support at 74.95. We'll see how the market holds that up. All right, but you got a big unwind of things that got too far ahead of themselves last year. Right? Going from $30 to 130 is not a normal year. Right? It just is what it is. Right? That's way out of the norm of things, and we knew that last year. We had said, many times towards the end of last year that what we were experiencing was not normal. This kind of coming back, retracing a lot of the move, believe it or not, is kind of normal. All right. Another area that I'm watching that I'm concerned about is the semiconductors. Right. I came into today, wanting to watch a couple names like Applied Materials, Lam Research, but this has now broken the 20-day moving average. This to me is probably one of the most concerning things, because I do view that the semiconductors lead moves a little bit, and this has not looked right. This had a little bit of a bounce last week, but just like with the Qs, they stalled out and there wasn't any real buyers showing up in this thing. It did not get into value for the month. Didn't even get close. So that's SMH. If you want to look at the SOX, that looks the same, right? You can use the SOXX ETF, but I always look at some of the best performers, and Applied Materials could not get into value last week. This thing's down 6.2%, broke the 50-day moving average. So it appears that you've got some personality changes going on here, and that troubles me. Lam Research, which has been one of the strongest names, down 7% today. Also breaking the, that's the 50-day moving average. ASML, which is another one, holding up better, but still, down 4.7%. So I mentioned I would give you the conclusion of all this. So while this is going on, and you could see by basically what I'm doing, in terms of trades, because I'm always transparent, show you exactly what I'm doing. So this morning, it's kind of business as usual for me. The couple names that I was looking at was SIVB, GE, looked kind of interesting to me, that it had a chance to kind of break higher, right? And I've been playing a lot in the industrial space, right? So I was looking for a move out of value, but this thing did not make it past top of value, which was 1360. I actually missed the target here. I think I was up at 1365. I guess being a little bit greedy, even though I didn't really have a lot of room in that trade to hit my first target. But you could see, so Caterpillar taking a target, Dow taking a target for profits, Lennar taking another target for profits. And then I was like, hey, well, why don't I start to look at some areas in growth that could possibly rebound a little bit? And they may still, but I may have been a little bit early today, and you could see that I just decided to take off the Zscaler. I was looking for something in the cyberspace. Crowd didn't set up perfectly to me, and that's one of my go-to names in the space, so I chose Zscaler. And that's the second time I've been in this name in a couple weeks, and I've bailed on it pretty quickly. My stop price was 165, but I got out a little bit early before that because I would rather just be a little bit more defensive. When I see the market moving as fast as it is to the downside, I try to just get out of the way. And you could see that with some of my trades here. I took off the GE for cost basis. I took off the Lennar. I took off the Dow. Again, just moving, and I've been very fortunate over the last week to be selling a lot of things for profits. But today, at the end of the day, I'm like, let's just get out of the way a little bit, move a little bit more into cash, and let's see if this market wants to, if buyers want to come in and start to support some of these beaten up areas. Because I don't think that we can continue to have this two different type market where it's just value and not growth. I think you have to have some type of a combination, going on. Even if it is more tilted towards value, I don't think you could have growth go down and get hit, and every time it bounces, get sold. I think something different has to transpire here. So, guys, in my opinion, again, I don't give any advice or recommendations in this videos, but be patient with this video. Be patient with this market. Let it go where it wants to go. If it starts to really act where there's a volatility picks up to the downside, in my opinion, the best thing that you could do is kind of stay on the sidelines, or have a hedge on if you want to have SPY puts on. We didn't talk about TLT, but that was a trade that I put on last week to hedge a move in interest rates. So I'm long TBT, which is essentially looking for a move higher in interest rates. And so far that's working. But that's really the best thing. The way that this trading game works is, when you make some money in the market, for example, I had a good week last week. The goal is not to give it back once the market, deteriorates a little bit, and here's what market breadth looked like. But that is just trading, trading 101 is, if you've made some money here and there, it's to not give it back, to be patient and wait for the circumstances to change. Okay, so you could see for NASDAQ, 2281 declining versus 619 advancing. This was not the case earlier in the day. This was all tilted. It was about, I think, 20 some odd names were advancing versus single digits were declining. But you could see that overtook at the end of the day. Same thing with the S&P, which was also tilted towards more advancing names. So, again, let's not get super gloom and doom here. Let's, hopefully wait to see if some of these moves down will kind of bring out some buyers into this market. If not, if we don't see that, then we sit on our hands and wait for lower prices. So that's just how it functions, guys. And over time, the more that you could, in my opinion, if volatility does continue to pick up here a little bit, and we start to break some levels to the downside, sitting on the hands, unless you're actively shorting, is a great way to be, and a great way to be able to counter once buyers do come back into the market. So we'll leave it there for the night. Thanks for watching, guys. Have a great night, and we'll see you tomorrow.